Yeah, I'm playing with a little bit of video work here. Trying to have some fun this morning. NFP News just went off about an hour ago. That's the reason I didn't trade the early segment of New York. Kind of give that a little bit of time to play out. But let's talk about today how the markets are not random. There's some things in the markets we can't control. We know that the algorithm, the way it delivers, we know there's some manual manipulation that comes in. I don't know who pushes the button. Somebody can push a button. Let's go through and kind of have a discussion this morning on this week's trading activity. Um, Let me share my screen here. Let's, well, yep. Let's start in the U.S. markets here. All right, here we go. So let's look and see what the news did this morning, and how random the market performed. Let's see, share screen. We should be screen sharing as of now. If someone can just comment, let me know that you guys can see it. It looks like you can. Wonder if I can make it bigger. There we go. Yeah, I like that a little better. So you guys can see that just a little bit better, or at least I hope you can. Um, so this is the U.S. 30, also known as the Dow. Uh, let's talk about what we talked about during the 2023 market expectations. We talked about, let's see, what was that? Sunday, I believe we put that video out. So this is Friday, Thursday. Let's see, Friday, Thursday, Wednesday, Tuesday, Monday. So when we started this week off, let's see. Oh, this is nope. This is in the H4. So let's go to the M15. So when we started this, go to the 1 hour. That make it a little bit easier. So let's go. Let's see, Friday, Thursday. Yep, here we go. This is what we're looking for. So when we opened up the year, we had talked about in the 2023 market expectation that we expected the markets to go down before they go up. We expected them to go make some form of draw in a liquidity pool. If you guys haven't seen the market review, I mean, I literally open up one of the top strategies that I use. I tell you how it works. I tell you what I look for. It's all there. I mean, this is in my opinion, there is very little randomness in the market. There are things that we can't control, like manual intervention, things like that. But I told you to watch out for the news releases that were going to be upcoming. I don't know that this is over yet, but we've seen a really significant news driver this week behind the markets, showing that the market needed to go down, it needed to fall, it needed to fall. So when did we start seeing this? So on Monday, we have this nice push up. It looks like the markets are excited. Looks like they're going to make a move forward. And then what happens? We make that high, come back down, we move, but we had this liquidity pool that had built up in this area. So we had these lows that had formed. Let's go out even a little further. So we had these lows, right, that had formed here, 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 here. And so markets kind of played in a median range. As a matter of fact, the markets have been super sloppy this week. I've even talked about it. It's been really difficult to trade this week. I've traded a couple times, the things going on with Amanda, things like that. So I don't have to trade every day. I have goals that I want to meet every week, and I've been able to attain those. We'll talk a little bit about those here in just a minute as well. But I want to talk about what they did this week. Kind of, in my opinion, it's still a part of the bigger setup that is happening. And so it just happened yesterday afternoon that they had a news driver event yesterday. This news driver was about jobs in the U.S., right? It was non-farm payroll. I believe the unemployment side of it, if I'm not mistaken. This morning was non-farm payroll report. Um, so what they did though during these news driver yesterday is they shot the market down. Just it's random that it just happens to come down. And let me take this off, and I'm gonna back up just a little bit. Just happens to come down and take out these levels. Let me move that down here. It even just happened to take out this level. So these levels that have been forming inside of this just happens to go down and take this level out. Imagine that, right? We talked about them diving after these liquidity pools, what they're looking for when they go. And on bigger time frames, especially, you see a lot of this. But I'm going to go in and just on even smaller time frames because every single time frame works the same. You just have to look for what liquidity pool that they're chasing after, find the right confirmations on them getting in after they take out a branch of liquidity, essentially. So on the higher time frames, let's talk about just we're going to stay in the US 30 right now because the markets are just firing right now. They're just literally all over the place. I'm gonna go into the Nasdaq really quick to show you how random the markets aren't. I drew this screenshot before the market opened. I drew this. There's this black box inside. This was actually initially a blue box that was in here. And then I came back afterwards and I made this larger blue box in here after they made the significant move, right? So let me do this. Let's open and I'm going to bring this over here. And I'm going to grab a screenshot that I took just a few minutes ago. All right, this is NASDAQ pre non-farm payroll. Now notice here, I had that little blue box that I showed you, and then I drew the bigger box on the outside of it, right? Now, they just happen to dive down and have to take that liquidity out before this news driver. Random, right? And then we're actually gonna talk about some news releases that came as well, and then we'll show the S&P and some other stuff. It's all the same. The way it moves is the same. So this is the 15-minute chart. This is the initial box that I drew was in this imbalance zone here, right? This was going to be in my opinion, once it broke through, it was going to be the initial resistance point, and this was going to be the initial break point. Was this gold line? Now, notice this is no candles. MetaTrader 4, you can't back up and move forward like you can with TradingView. There's no manipulating what I'm showing you here, right? And so I'm going to make this smaller. We're going to go in here. Let's dive into the 5-minute, and I'll show you. Let's do this really quick. Let's zoom in. So this is the chart we were looking at just a minute ago in the screenshot. So this is that chart, right? The screenshot was taken here when this candle was formed. This was the line I said that they would initially move off of. This was the box that I said they would initially bounce from, right? So notice on the 5-minute chart how price comes up in that first 5 minutes of this news driver event. It comes up, fires through this point of the market. Why? Why did they do that? Let's go out. It's because of these equal highs over here. They need to take the liquidity here and open up those buy stop orders that were in place there, right? So there's people in the market, retail traders especially, that have buy orders that say, okay, well, if it breaks this point, the market's going to continue to go up, right? So they open these buy orders up, right? So then they suck the market back down into that box that we talked about here, right? So the bust through comes back to this box. And what happened? If we go down into the 1-minute chart and dissect it a little more, look how it went up and busted them out. It comes down into this box. It's fighting going lower, fighting going lower. Look what they're doing here, by the way. Most likely going to come into here to take out the people that got in on this move. Most likely. But we'd have to see some confirmations because, all right, so comes down, it fights, and then it moves up to what? These people here were panicking when price didn't continue up. So they're closing those orders in a loss, right? Because most likely they had their stop losses set down here. Where they're like, oh my goodness, the market's reversing. So people are diving out of those trades that were opened up that had opened beyond here, trying to catch this big push-up move, right? So these people take a losing trade. They also were able to stop out people that were in sell positions that used trailing stops that was following the markets to come down, right? So they use this to bust those positions out. So now, once people see price reversing, now they're panic selling because the market's moving so fast during these news drivers, right? So now they're trying to panic sell, panic sell. What do? They drive the market up off of this initial blue box. Let me move this over and you'll see this is the same box that I had drawn just a minute ago on the 5-minute chart. Nothing's been changed. I'm going to move this one because I drew it after, right? So that was that inside box. That was the inside box. Okay. This box was going to be where the long-term price, that if it broke this structure, I felt they would come back into this area before they move up, and this could be the turnaround zone. So anyway, um, I don't trade high impact news drivers. I don't. But what they did is when they come in here, the people that were selling off had their stop losses placed here because they thought the market was reverting, right? Because we've been told fear, 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 get out of the market, get out of the market, get out of the market, right? So they've pushed the market back up one more time, busting out those people that tried to catch the initial sell positions. And now here we are again after all this is done. That's why I tell people got wrecked with a T. Like that's a level of wreck that's hard to explain, right? So people just got absolutely wrecked. And so now we're going to wait for this initial sting to see if there's any positions that open up afterwards and let the market makers really show the hand of the direction they want to go. Going back to the 1 minute, that's what I was saying here. Oh, it's just awful random that they just come and absolutely took this level out, just barely, right? Just barely took that level out. And you're noticing that initial box that I had drawn, which is this black random box here. Notice how it's now becoming hard to break back through again. That's a really strong zone from previous market data, and you can find these zones. Just look for imbalance areas, and these become what's a word I can use? Okay, from a retail perspective, they can become support and resistance. They can, right? So the reason there was no resistance on this initial push on this news driver is there wasn't meant to be. They just blasted through it, right? So they had to come back in, balance price out. That's what this area is they needed to move through that zone several times before they move up, right? So now we have the equities market that is opened right when I went live here 12 minutes ago. And so that's this initial volume that you're seeing come down. And so they're working their way back in. They could come back down into this order block here. They could be utilizing this area here. So pay attention to these kind of things that are forming in the market, right? So these are the areas that notice how this block that I just drew before they ever got there. Notice how it's becoming a resistance zone, right? It's becoming that area of pushback. It's serving because people that just got in trying to catch this little reversal out of this zone, they're needing to bump on the lower time frame liquidity areas. They need to bump these people out, right? So, and they're using fear to continue to drive the market. You know, we covered all of this the other on Sunday. So let's pull up. I haven't looked at any news. I get like random Facebook stuff. Let's look at news from. I wonder if I can put news from yesterday. So here is the news. Bloomberg financial news, I guess you should say. Let's look at live now. All eyes on the CPI report after Goldilocks payrolls data. And if you're wondering where you can find this heavy impact news, the calendar at Forex Factory is a great place to start. And so you can see this morning was non-farm employment change was here. They released the unemployment rate. We have PMI coming up, by the way, in 17 minutes. It's kind of the next news driver. Yesterday, looking back at the news, and the reason that was as big was FOMC was on Wednesday. And then yesterday, we had the non-farm employment change data. So this is a week filled with news. It's really hard to trade through these weeks. I suggest new people, especially, just take the damn week off. But let's go in and look at market news and kind of see what are they showing us. So gain on labor. This is after the news driver this morning, of course, 13 minutes ago. The news was an hour ago. But let's look at like yesterday. I wonder if I can put like yesterday's stuff. Because I remember, let's see. I don't know if I ever closed this down because I keep that it shows. Um, hmm. No, I guess I closed it down. I get like certain sources that send um, news to my phone just to kind of keep an eye on the headlines. I very rarely read articles. Um, but if I could search through, like, just do some research yourself because we're really not. I'm not going to gain anything by showing you any of this. But if you could look from news yesterday and the day before, you'll notice how we had like negative market drivers. Things about how the U.S. jobs were the wages were bad and things were. It was gloom and doom as of yesterday. I don't look at news enough to even know how to break this down from yesterday's news. But anyway, I'll try to learn that a little bit more as I'm showing you guys. But if you look at news over the last couple of days, they expected the market to tank, right? They wanted the market to tank. They wanted people to think that this news driver was going to drive the the market on down, so to speak, right? So we shall see. But as of right now, I'm not doing any trading. The market really hasn't shown me anything as far as me wanting to take a position. Um, I even said in the 2023 market overview the other day, I got some areas that I'm really looking for. I expect them before the big move up. I would expect them to break this here. I've expected that. I expected them to break that before they make another move up. And even once they break it, I wouldn't suggest you guys just jump in the market, because we don't know what the overall plan is. We only know based on what they've shown us in the past are the possibilities. But I expect them to break through here, and then I'm going to be looking for buying opportunities back into the market. So this is on the NASDAQ specifically. On the US 30, also the Dow. Let's look at it. Oh, yeah. These equal levels right here, they didn't bust this market up really high. I mean, really, really hard. I want to see a good, strong break in structure, which they didn't do. So, kind of what I'm looking for in the market here, uh, and it relates the same to the NASDAQ, by the way, is let me go to the daily, and I'm going to zoom in on the daily here a little bit. I would fully expect them to come back into this area before a push up, right? So, and this does very similarly align with the Nasdaq. Um, so this is a strong potential to come south of here before they make a move up. Looking at that on the bigger chart here, you can see we've had a push up in data, but even though the news was scaring the hell out of you, saying get out, get out, get out, get out, the markets are falling, the markets are falling, the markets are falling. You have this area of equal highs up here in the lower time frames, which is drawn here. And so I expect them to come down and bust out some liquidity before making a large move up, which would align with what I'm expecting on the NASDAQ, right? So I expect them to come down on the NASDAQ. I would really not be shocked for them to go sub 10,000 on the NASDAQ specifically. Um, it would not surprise me a bit for the NASDAQ to come sub 10,000. Somewhere between that line that I have drawn there and maybe right here, somewhere in this area, I think is how I had it drawn up on the market, the 2023 market overview. Coming into this zone before they make a push up, which you can see that's what they're working on. But they're not going to do it without taking out liquidity from the short term traders, the day traders that are trying to get in and out of the market to profit. That's what they're trying to do, is they're trying to drive us out of the market. These news drivers, they're really hard because even though the algorithm behind the market gives us some really consistent possibilities, there's still at points that you can just tell there's manual intervention, right? That they say they can see all orders across the entire marketplace, and they can push buttons to manually intervene in the algorithm. I truly believe that. So going back into the lower time frame, you can see I told you this block that they were coming into was going to be a pretty strong resistance point. I think that they'll probably come up. I think they'll break through it. Don't know that it'll be today, but they'll break through. But keep an eye back on that initial box. Keep an eye. That's a very important level from this imbalance area here. Notice how this level was really important going back into the 1 minute time frame here that we had covered just a minute ago. Right? Notice this initial box. So this was a box that I drew later, right? This was the initial screenshot that I had before this news driver market was going to come to at least here to bust it out. Now, where they went on the top side also isn't random. I'm going to show you guys that as well. But I knew they would want to bust out these before taking a look at moving down. I knew that they would most likely call what I call a double pump. So go up, come back into this box and bounce, which is exactly what they did. They went up, busted into this area, come back, balanced out some books, moved orders up again for people that panicked sold because they thought the market was falling. They busted them out, and now they're moving down again. And I told you this area here was going to be a pretty strong resistance point. So this is just nothing but a order block, by the way. I don't know if it's a 15 or a 30, but it's looks like a 30. Looks like a 30-minute order. Let's go to the 30, and we will take a look at that. Yep. So this is just a 30-minute order block that had happened, that they come down. None of this is random. None of this is random, by the way. I really want you guys to understand that it's not random. So let's pay attention to this initial blue box, this one here that I had drawn earlier. Possibly We got to wait for some confirmations. But you could see something like this here and then here, right? You could see that. Or if they don't give us a confirmation, they could go on up, because where they also went to was not random. They did not go to a random area. Let's peg it here. So here's their up move, right? Now, why is this significant? Why is this level important? It looks to me like this is a previous 30-minute or a 1 hour. It most certainly is most likely a 1 hour. Yes, it sure was. This was a 1 hour imbalance area in this zone here where the market had moved up. They come back to that area. Same thing as this, the same idea as the block here. You just got to know how to use these. And that's what I try to show people, is how to utilize areas of importance, right? This is just nothing but an area of importance where they come to. The US 30 went back to an order block. Let's go over to it really quick. Let's go to the 5-minute. 15, 30. Yep. So they come back, the US 30, which is the Dow, right? They come back and just happen to randomly take out this area of liquidity. And it's the S&P that went back into the primary order block. But they went back into this order block area that was created here. If we go to the lower time frame, I bet we can even narrow it down even better. Let's go down to the 5. And let's take a look at this order block in general. They took this area out, right? This liquidity area. They just happened to randomly take it. And they just happened to randomly come back into this order. I'm not even looking at the entry price over there, by the way. Keep that in mind. Don't even remember what the price was. As a matter of fact, at the high. Grab the wrong tool and grab this. And let's see if that's about where they came. Oh, look, right into that order block area off of a lower time frame from this side here. These are recognizable events that reoccur over and over and over and over and over again. The point in learning how to is learning how to utilize these, right? Let's go back over to the S&P. This is random right here. This is absolute randomness. You can hear the sarcasm in my voice, right? They brought the market directly. This is my initial line that I had drawn here. I knew that they would bust out. My initial blue box was here, and we'll go look at we'll dive into this lower time frame here in just a second. And then I thought they would push back up. They pushed right back into this order block area here, but they gave the retail traders a little something. You got to dangle the dollar bill over their face, right? You have to. If not, nobody would trade if they, didn't. Let me move my trend line, which, by the way, I don't use when I trade. Just to be very clear, I'm actually just going to draw a new one because that one's acting weird. So take a look at that. Take a look at that. So trend line traders, here's what happened to them. This is a retail concept. They saw price reject off of this trend line and come back down to this initial block that I had drawn right here. Now this is the S&P. It's a completely different block. I'm going to bring it up as well. The S&P. Here's the initial block that I had drawn before the market moved. You see, this is the S&P right here. This was the initial block that I had drawn. This was the initial line that I knew they needed to take out. Right? They come up, they take it out. Boom. They hit that trend line mark. They hit that trend line. That's what retail traders are like, oh my goodness, it hit my trend line. Sell, sell, sell. So they get in this sell, expecting price to move down. They see it reject it. Now they're selling the market. Selling the market. Then what happens? No, 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 sir. We're going to bust through there. The algo takes it back, boom, goes and busts out these retail traders that jumped in that sell, making that decision too quick. And then boom, price. They take them out here, and now they're pushing back down and rebound now, so they can make a decision on where they're going to go from here. What liquidity they need to take. Now they've taken liquidity on both sides. In this specific market, they've taken both sides of the primary short-term liquidity. They took this area here, but it's random. Random. They took this area here. They took this area here. They've now cleared out this order block area, having the larger push down. They've respected that volume, that order block here. So that block of orders that was in this zone, they've respected that. And now look at price starting to push up again, right? So we'll see if they're going to go up or down. Right now, we're going to have to wait and see what signs they give us. They've already done their work for the morning, right? So now we wait and let them show us this is the direction that we want to go. And at that point, we can jump in with them, or if no signs show, we don't have to jump in with them. This week has been a really good trading week for those of you that are following the trading journey. Um, it's been a really nice trading week. I've already hit my goals for the week. Here are my trading stats for the week. You can see this is my manual trading. I'm logged into my account here. My track record is verified. I traded 2 days total this week for a total of 10.5%, 9% gain. I tell all this to tell you that, you learn to spot these things. This becomes a great return on investment that you can get. And let's hop back over to the NASDAQ because I think they just busted through our box here. They're in our box now. So let's see if this acts as a point of moving down, if they're going to utilize that to push the markets on down for further draw on the higher time frame liquidity, which is what I expect. I just don't know if it's going to happen now. So I'm not going to just jump into the markets. It's not the way it works. I want to let it show me and tell me which way it's going to go. We did have some imbalance here. I'll show you a good way to identify imbalance. I have a little tool that I use. And here it can show you. See, we have this imbalance area here that is now becoming this zone of pushing back against price, right? So notice how price came back into this imbalance area and it respected it. Notice how it come back into this imbalance area and it respected it. It come back to this imbalance area and respected it, right? So you got to know which imbalances are important and why. So notice how we've now rejected this imbalance area from this point. This imbalance has now been they've rejected, so they've respected this area. So now let's see. We're going to wait and see if they give us a reason to trade the market. Right now, there's no reason to be in this market. There's nothing that I see that would just jump out as like this is a great position to be in. This is most likely, I'm not really sure, but this is most likely somewhere near the 50% of this move. We can take a look at that. Wouldn't take long. Just random. No, just random that it comes back to the 50% mark of that move and pushes down. It's just random though, right? I looked at, I knew it would be somewhere close, but if I go from the bottom of this move to the top of this move, these two X's, look where that price is at. But it's just random. It's just random. Markets aren't random, folks. You just got to know what to look for. So leave our initial boxes on and we'll remove that. Now we'll see. We'll see what they're going to do. Let's see which way they want to go, what liquidity they want to go after next. I don't really have a reason to trade. Oh, an update on my one of the $1 million. I'm this month. I'm taking $1 million in additional funded challenges. I'm already funded, but I'm taking an additional $1 million. Here's an update on account one. This is a $300,000 account, up just above 6% so far. These are I trade these much differently, by the way. Trade these much differently than I do the my cash accounts. I trade completely different than I do the challenges. Once my challenge accounts become live accounts with those companies, I trade them the same as I do my cash accounts, but on lesser of a risk. Most of the time, I'm risking 1 or 2% of trade in my cash accounts. Whereas in my funded accounts, I don't take those kind of risks because the money is so large, you don't really need those, right? I like the way Michael puts it when he talks about it on his channels and stuff. Is you just need to meet your ends, right? You don't have to be greedy. But I think this morning, in the last 29 minutes of us being live, I have shown you how random the markets are not. And I want you guys to be able to remember my Discord is free. You want to come in and you want to learn how to trade, you tell me you want to come in and learn how to trade, I'll help you. But notice how this is not random. Now, here's our news event, right? We have a news event right now that is live. So I think this was PMI, if I remember correctly. Is that right? Let's see. I already closed that down, so let's pull it over here. This is, yes, ISM PMI. So this is PMI live right now. This is why you see the markets jumping. This is why there's such an instantaneous surge in market volume, because people can read PMI data in the first 4 seconds of it coming out like that. This doesn't work that way, folks. The news is just an excuse for the driver to happen. It's an excuse for the thing to take place. You know, people say, "Oh, FOMC minutes." They release them at like 2 o'clock on a Wednesday. I think it's the first Wednesday of the month or something or whatever. Um, and then all of a sudden, 0.07 seconds into this release of the FOMC minutes, the market just starts going berserk, right? Because people can read an entire set of FOMC minutes in that kind of time frame. Just it's not. It's not. You can't convince me it's not. I don't care who tells me it is. It's not. It's not random. Um, so it's driven, right? It's algo driven, but there absolutely can be manual intervention. You just have to know where to get in, the safest points. Do we know where to get in every time? Absolutely not. That manual intervention switch that they have, and I'm 100% convinced that they do. I think that they can manually intervene when they see a certain amount of liquidity somewhere that the algo has already moved away from, or people have gotten in after a liquidity sweep. They have a way, they have a button they can push to go after it one more time and jump back in. Which most retail traders, when they lose that first trade, they're kind of gun shy moving forward. But the markets are not random. If you believe they're random, I'm sorry, you're buying into the retail mindset, which is fine. But we're in my group, just everyone that I've ever worked with and tried to show what I know, they understand if it's not algo driven, how can we get this close this much? Supply and demand doesn't fit that narrative. It doesn't fit the narrative. So we're looking at the NASDAQ here, by the way. We know that there was this event that drove down. Now we'll see if they drive up, right? So now the people that were saying, okay, we're selling, 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 looks like they're about to get wrecked. Looks like they're about to get wrecked. So we did not get the rejection. We did not get the confirmation. That's why we don't just trade on a whim. We have to have some confirmations that come in place. And we was going to see if it was going to drive down. Now that with the PMI event, looks like they're going back up. Let's go to the 1 minute. Let's see what they have up there. Okay, so there's a pretty good bit of imbalance in this area here on the 1 minute time frame. You got a couple of relative equal highs in this zone. There's gonna be some liquidity there, so people caught some stuff. So we'll see if they come back and reject out. Higher time frame wise, there is this. This is the 15. There's this area liquidity that has been shown here to be rejectable. I think is a good way to put it. Swinging on out to the 1 hour. You can see that we'll call that a rejectable zone. Then you have this liquidity pool here, right, on the 1 hour. This is something I've been watching for quite some time. I actually talked about it during my market overview. This area here. So if we show a potential buy has been confirmed, these are the areas that I will be looking to go to. Where's the liquidity at? Where's the money at? Where are we going to go to? We only want to ride their coattail, but we got to know which way their coattail, which way the wind's blowing their coattails, so we can jump on it. Right now, it's just looks like they're just clearing out some imbalance. Let's go take a look again. Yep. So there was a lot of imbalance on that 1 minute that we just discussed. And so we'll see. Oh, but guess we're rejecting. Remember that initial blue box that we drew before the market ever started anything this morning, before the news drivers? There's nothing to show here. Oh, there better be something to show there. Hold on. So this was the S&P. That was the initial box on the S&P. The initial box on the NASDAQ was here. This was that initial box that we drew on the 15-minute time frame. This is that box. We're looking at it on the 1 minute time frame right now. But notice how it's even from that being an important zone so long ago is now becoming a zone that they're having to push price back through, right? It was resistance here. We talked about it with this little line to go up and down. And then now it's being a fuzzy duddle to them at this moment, right? So now we're back into a little area of imbalance. There's going to be some liquidity down here. So it would not surprise me. I'm going to remove some of this stuff here. It would not surprise me the markets to squeeze. I can't go over further in history, but It would not surprise me for the markets to squeeze, which is what they're doing right now, by the way. You can tell they're starting to squeeze the market. What is this doing, by the way? What is this doing right now? I want you to think about what you're doing right now. Because people that are not patient are getting in the market right now, whether it's on the buy side or the sell side. Retail traders are guessing at this point. They're just guessing. And so this is building up liquidity on both sides. This is building liquidity on both sides of this squeeze is starting to happen. You can call this even a flag pattern. That's what retail traders would look at this as a bullish flag pattern, right? Because we had this big spike up, and now it's not breaking down again, and you can see it's a flag pattern. So bullish traders are thinking buy, buy, buy. So you have all this liquidity building down here from bullish traders, and then people that are saying, well, no, we've hit this point over here. Now we're going to go down further, and so you see how retail traders are guessing. We don't want to be in the guessing game. We want the highest probability entries. That's really important. We're not going to win every trade. To think of that, to think that you're going to come in and master this as some, hey, we're going to win every trade. It's not going to happen. That's where, in my opinion, that's where the manual intervention comes in. I think that busts us out more than the algorithm would bust us out, as long as we're making the right decision that the algorithm is showing us, right? So, but notice how this level, man, just awful random. This level from the past that I drew this box before any of this started happening was so important right here, so important right here, so important here, and now is being important again. This box is so important in the algorithm. So important during the algorithm. So in the box I drew after the initial spike was this box here. But the initial box we had come out of this imbalance zone this morning before any of this move started happening. If you guys have questions, by the way, throw them in the chat. Feel free. I'll be glad to answer them. I'm going to stay live for a few more minutes. I'm going to see if the market makers show us anything worthy. Amanda's, I believe, still in the bed, resting. So it'll give me a little bit of time before she wakes that I need to get in there and get her medicine or whatever she's going to need. But if you have questions, put them in the chat. Don't hesitate. I'll do what I can to answer them. And then Sunday night, we'll do a full weekend review along with our upcoming expectations for the coming week. That'll be Sunday night at 7 o'clock Central Time, 8 o'clock Eastern Time, 8 o'clock New York time. A lot of people around the world operate on the New York time because of the market there. So it'll be 8 o'clock New York time, Eastern Standard Time. We're going to have a review, be able to ask questions. I openly invite you guys to come in and ask market questions and have a chat and discussion with me. And let's see what they're going to show us here. Anything else this week? Euro USD has been kind of random. Yeah, look at this chart. This is got this as a wild one. So this is a chart with an overlay, by the way, if y'all are wondering what the heck is going on right here. This is an overlaid chart with two different sets of price on it running. One is running one. This is a correlated pair with the pound dollar. The orange and light green is the pound dollar, and the green behind and the red is the euro dollar. And this is something I'm going to be talking about in the coming weeks on how to utilize correlating pairs to successfully just obliterate the markets. So this is just a correlating ideology, so to speak. So yeah, let's see. Here's the pound dollar for the week. Just there's been a lot of consolidation. When you look at the week as a whole, the price action has been very sloppy until the news drivers. Right, we had these news drivers here during London. I believe it was Tuesday, if I'm not mistaken. Let's see, Friday, Thursday, Wednesday, Tuesday. So in the 2 o'clock in the morning, Eastern Standard Time, there was a big London news driver that drove the pound. But besides that, price action, look how sloppy. Right, there's no breakouts, there's no trends, there's not a lot going on. And then today, of course, this is the news driver from this morning on the dollar that you see working here. These two big candles that have occurred. Just not a lot. not a lot happening this week. Of course, it's actually expected. The first couple weeks is pretty much always like this. Back to Apple. We talked about Apple the other day. We talked about it going and making a new low, and then we are going to await some confirmations to see what Apple was going to do. Um, I still believe there's a high probability that Apple will go back to 146, somewhere in that area. And why? Why do I think 146 is? Well, this area here has my interest. It has my. I'm not saying it won't go higher, but I think this area here definitely has my interest for sure. Um, but I have not received confirmation to dive off into that at this point. This is how the news is affecting Apple this morning. The news drivers that we see coming out, you can see are having a positive effect, but we really haven't had that whammo moment that I'm waiting on as my confirmation. And I talk about these in the group, my confirmations as to why I'm going to get in that trade, that option. I don't trade stocks to buy and hold, but you can just tell the markets work the same way. By the way, I mean this area here is just, I'll call this area ripe for the picking, and this is 130. Um, but these equal highs here are definitely ripe for the picking. But they work the same. They go through and they take liquidity, just like we talked about during the. I don't know if it was a market review I talked about Apple or what, but I said that I thought that they would come and they would take out this area here. Don't know why that line is moved, um, but we thought that they were going to take this area here and then potentially make a move up, and that's why I think the 146 is an area to look at. I also think the 158 area would be something to look at as well. Um, over the next couple of months. So, but we haven't received confirmation to head that direction yet. I like 146. I like 141. These are numbers that I like short term, and I think that it could get here before we see a larger push down. But we will await confirmation to find out when that moment could occur. Ooh, look at there. USD is gaining some strength back, which means the USD CAD probably got wrecked this morning. Let's go take a look at the USD CAD and see if they're showing us anything over there. USD CAD. Yeah, got wrecked this morning. That's right. Same thing though. There's definitely, this is about as obvious as it comes here. Um, they definitely need to sweep this area, even down beyond this candle. But this area you can tell of previous importance. Um, Retail traders look at this as support, 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 support. I would probably guess even. Oh yeah, they took this area too. So what are we on? We're on the 1 hour. Yeah, if we go to the daily, we'll probably see this be a little more prominent. But see how this area became important again, right? This area of imbalance was respected. It's kind of the reason I think you see the push up. But the U.S. dollar right now is wrecking the CAD at the moment. Um, but I mean, it's getting. I said that completely backwards, by the way. The U.S. dollar is getting wrecked by the CAD at the moment. But nothing random. I mean, look at these. I didn't even know that was back there, by the way. But look at this. Let me drag it back a little further. Why in the world? Yeah, exactly. They came on down to take that area of liquidity. Notice how price pushed up from there. Oh, and they just happened to go back. Where'd they go back to? Yank that area of liquidity out before they make a move down. Um, this area is going to be something to be looking for sure. Um, this is the 1 hour. So let's go look at the daily. No clue what any of this is. What the world? Yep. Oh, this area here is going to be berserk going back here at some point. Lots of liquidity above that zone. Go over to the weekly. Oh, it's just random, folks. It's just random. It's just random that they went back to that order block right there. Just random. By the way, it's not random. I don't know if you guys can hear the sarcasm in my voice. Yep. So this is that push out of that weekly order block zone. Um, I don't see really any super significant lows on the long-term daily. They swept here, of course, before they made. Like I said, I told you guys the other day on the market review. Before every big move up, there has to be a big move down. And before every big move down, there has to be a big move up. We see that here. This all forms, right? They think price is coming down here, but they needed to make a big move up first to sweep that liquidity. And now we see this happening here, right? So we did have a structure break here. Price comes back. Where does it come back to? Randomly, this order block here. And now price, you can see, is coming out of that zone. Easy to draw up after it's happened, by the way. Same here. Traders see this area get swept here. This is what I'm speaking of on manual intervention. I really pay attention to what I'm showing you right here. I don't know that there is a complete way to avoid it, but even when they made this push down before they needed to move up, price comes out. We have a breakout. I guess you could call that. That's what I guess the retailers would think of that as. They have a breakout. I would be really curious if I put a certain, and I'm not an indicator trader. I want you to understand that. I trade naked charts. But sometimes when I look back, I'm like, I wonder if they took out retailers based on a specific thing. And I always wonder if this was an orange X in a specific indicator that we've built. Let's see. Let's see if it's orange. It is yellow. Actually, that would be green that I was looking for, and there it is. Orange is top side. So was it green? Yes, the green had formed. They pushed down, and they needed to bust out that in a double way. I see my wife. Hold on, just 1 second. No, I'm live right now. So what they did is they just went back and they wrecked them before they made the move up. But like I said, before every big move up, there must be a move down. Before every big move down, there must be a move up. And so pay attention to these things because this is how they wreck out the retailers. And look, by the way, we have the green, which tells me an indication that they were going to come back to that area for sure. They're coming back to this area. These are really strong retail points, by the way. Really, really strong retail points, just like this orange one is here. So keep an eye on these zones for sure. All right. Anybody got any questions? We're going on about an hour. I'm going to sweep through the markets one more time. Yep. And I wonder where they rejected from. Look at our old box that we drew this morning. When they broke back through it, come back down, respected it. Now they're coming back. What did I tell you? This is looked at as a bullish flag, right? So we're coming back into that bullish flag area. You're seeing it reject. This is retail concepts. Remember, they cannot let retail traders lose every time, or there would be no retail traders, right? So you see these concepts work at times, but they're not consistent. I believe there are retailers that make money, by the way. I think there are retailers that know how to manage their emotion and risk properly, and they can make money. We are retail traders. We are. We're not, we're not a large hedge fund. We're not moving, billions of dollars into the market at a time. We are retail traders, but you can tell when they get to these zones, there was resistance here. Now, what are they going to do? Are they going to show their hand here, or we're going to have a continual bullish move up? We'll see. So they haven't given me any sign that says, "Oh my, this is what they're doing right now." So I will sit on my hands because if you remember earlier, which I deleted it off, but I told you there was an area of liquidity here that they're going after. Of course, there's liquidity above this mark. So we're going to pay close attention to what they're doing over the next couple of hours. Days like this, when there's high impact news drivers, some retailers think of the market as a slot machine, and that's what days like today are exactly that. They're gambling, trying to catch the bigger move, so to speak. And so we'll see if their little bullish flag play stays bullish, if they allow the retail traders to go ahead and roll it out, or are they going to go up, snag some liquidity, and move the market down? So we shall see. But I really have Amanda's up now, so I'm going to hop up and help her. Um, I don't know if you guys know, but she got out of the hospital from surgery 3 days ago now. I believe it was Tuesday, I think, and then Wednesday ended up back in the hospital with complications. And they sent her home. They had no rooms available. It was really just a train wreck at the hospital. Our first responders and workers, I commend them to a level that I don't even know that I can put into words. The things that they're dealing with, and then they deal with every day. It's so difficult. But anyway, she's home, so I want to hop up and help her some. I'm not. I'm sitting on my hands, just like I said in my private group earlier. I'm sitting on my hands right now. I'm just waiting on the market to tell me something, show me something, and it hasn't done that. And so we shall wait and see. So you guys have a blessed day. If you have questions, remember Sunday night, 8 o'clock Eastern time, 8 o'clock New York time. We'll have our weekly um, review and our outlook for next week as well. So I invite you guys to join us Sunday night, 8 o'clock. For that, we're going to go a little bit more in depth. I'm going to continue to show you guys what I expect in the next week, the next market week. And hopefully this guys can help you. And if you're not in our free Discord group where we're putting together like a badass teaching training to help newbies learn, what we learn and show you that this is how you can make a living, but you have to learn and do things properly. And it can also wreck you, just like this morning. A lot of retailers got wrecked, and you have to learn to avoid these moments. I said yesterday to some people that were asking me about some stuff, I said, listen, it is just as important to stay out of the market at the wrong time as it is to get in at the right time. And this morning would be an example of wrong time. By the way, look what's happening. They busted out of that flag that we talked about, and they're headed back down to snag some liquidity. I still think that they're going to go after this liquidity zone, but we shall see. I don't. My intuition doesn't lead me to take a trade. I may think something, but I want my confirmations before I dive off in there. So I hope you guys learned that level of patience. I had to blow a lot of accounts to get there. I had to blow a lot of accounts to get there before I learned that my intuition does not fight anywhere near the logic that I have learned and taught myself and learned from various sources. So thank you guys so much for joining us, and you guys have a blessed day, and we'll see you on Sunday night, if not sooner.